Nextdoor Holdings Inc. is trading at exactly 2.40 USD, pushing up by a staggering plus 0.39 or 19.40% so far in today's intraday session. If you are looking at your screen wondering why a neighborhood social network is suddenly behaving like a high-octane biotech breakout, you are not alone, but you need to look closer. The expectation for Nextdoor has long been that it is simply a digital town square for lost cats and noise complaints, a low-growth utility with a capped ceiling. The reality, however, which is violently asserting itself on the charts today, is that Nextdoor is rapidly morphing into a highly targeted, AI-optimized local commerce engine that Wall Street has significantly undervalued. This 19% move isn't just a random fluctuation, it is a repricing event. The market is waking up to the fact that hyperlocal data is the one thing the giant conglomerates cannot easily replicate, and Nextdoor owns that layer. Let's analyze the immediate price action because today's volume is telling a very specific story. We are seeing a massive liquidity injection into NXDR. Usually, this stock trades with a relatively thin volume profile, but today, millions of shares are changing hands in the first few hours of trading alone. This suggests institutional accumulation rather than just retail enthusiasm. When you see a stock gap up and hold its gains near the 20% mark without fading instantly, it often indicates that a clearing price has been raised by larger players. We are seeing block orders hitting the tape, likely from funds that use platforms like interactive brokers to execute algorithmically to avoid spiking the price even further. The momentum here is breaking through resistance levels that have held this stock down for months. Retail traders using the Robinhood app or SoFi Invest are likely seeing this ticker flash on their top gainers lists right now, fueling a secondary wave of buying pressure, FOMO. But the initial shove came from somewhere deeper. What is driving this? We have to look at the convergence of recent catalysts that are finally boiling over. The market has been digesting the recent integration with Waze and the rollout of their new AI-driven ad performance optimization. For a long time, the criticism was that Nextdoor had users but couldn't monetize them effectively. Investors used to look at Nextdoor and see a platform that was great for engagement, but terrible for conversion. That narrative is dead. The new data coming out regarding their AI ad tech shows click-through rates improving by triple digits in beta tests. That is the kind of metric that makes growth equity managers sit up and take notice. If you are managing a Schwab Intelligent portfolio or looking at sector rotation within a Fidelity brokerage account, you are constantly hunting for operating leverage, the idea that a company can squeeze more profit out of every dollar of revenue. Nextdoor's new ad tech promises exactly that. The stock is reacting today because the market is forward pricing the next 3 quarters of improved margins. It is crucial to understand the psychology of this specific trade. Stocks like Nextdoor often languish in what we call apathy troughs, periods where the price drifts because no one cares enough to buy or sell. When a catalyst hits a stock in an apathy trough, the move is explosive because there are no weak hands left to sell. Everyone who wanted to leave has already left. The only people holding the stock at $2 were the true believers and the passive index funds. So when a spark lights up, like the realization that their local ad dominance is actually working, the buyers have to chase the price higher because there is no wall of sellers to absorb the demand. This is why we are seeing a vertical move to $2.40. It is a classic supply-demand imbalance. Let's take a step back and discuss the landscape of online investment and how this fits into your strategy. Whether you are engaging in self-investing through a taxable account or managing a Fidelity IRA, you have to categorize your holdings. Nextdoor is not a blue-chip stabilizer like an Apple stock or a Tesla stock. It is a turnaround growth play. The risk profile is completely different. When you use investing sites or mobile apps like the Fidelity mobile app, you have access to research that often lags the real-time price action. The analyst reports might still have hold ratings from 2 weeks ago, but the tape is telling you buy. This is where individual brokerage accounts give you the power to act faster than the consensus. You don't need to wait for a committee to approve the trade. You can see the volume, understand the pivot in the business model, and execute. Now, I want you to pause for a second and think about your own usage of the platform. Comment below with how many times you've opened Nextdoor in the last month versus something like Facebook or Instagram. Your personal user audit is often a great leading indicator for stock performance. If you're finding yourself using it more to find plumbers, babysitters, or local news, that is exactly the utility value the company is monetizing. Speaking of the company itself, let's look at the business model because it is often misunderstood. Nextdoor is not just a social network, it's a geospatial verifier. To get on Nextdoor, you generally have to prove you live where you say you live. This creates a high-trust environment compared to the anonymous chaos of other platforms. Advertisers love high intent. If you are searching for a roof repair on Nextdoor, you aren't just browsing, you have a leak. That intent is worth significantly more per impression than a random scroll on TikTok. Their revenue comes from local businesses who need to reach exactly 5 miles around their shop, and national brands who want to feel local. The disconnect in the past was that their ad tools were clunky. Small business owners found them hard to use. The recent updates, leveraging AI to help write ads and target neighbors, removes that friction. If they can turn every local coffee shop and handyman into a recurring advertiser, the revenue ceiling disappears. We also need to consider the macro environment. We are in a market phase where investors are rotating out of the overcrowded mega caps and looking for value in the small to mid cap space. If you look at the flows in Fidelity mutual funds or Fidelity ETFs that focus on the Russell 2000 or extended market, you see money moving into companies that have been beaten down but have clean balance sheets. Nextdoor fits this criteria. It has historically maintained a strong cash position relative to its burn rate, which is a massive safety net. In an era of higher interest rates, companies with cash are kings. They don't need to dilute shareholders to keep the lights on. This financial stability allows them to invest in the AI tools that are currently driving the stock price up. We also need to discuss the competitive moat. Who is the competitor? Facebook groups? Sure, but Facebook is broad and noisy. Yelp? Yelp is for reviews, not for conversation. Nextdoor sits in a unique niche of one. It is the only platform that maps the social graph to the physical graph of neighborhoods effectively. This makes them a prime acquisition target. Every time the stock dips below $2, the buyout rumors start swirling. Could a larger player, like Amazon, looking to bolster local delivery logistics, or a private equity firm looking to strip costs and maximize cash flow, swoop in? That acquisition premium is always priced into the stock to some degree. Today's 19% move could also be sniffing out some M&A chatter, although nothing is confirmed. Speculators using Robinhood's stock trading features often pile in on these days hoping for a Monday morning merger announcement. Let's look at the technicals on the chart. $2.40 is a significant level. If you look at the past 52 weeks, the stock has struggled to maintain momentum above the $2.50 to $2.75 range. If today's close is strong, meaning we finish near the high of the day rather than fading back to $2.20, it sets up a cup and handle breakout pattern on the weekly chart. Technical analysts using the Interactive Brokers trading platform will be setting alerts at $2.50. Once that level breaks, the next resistance is significantly higher, potentially in the $3 plus range. This is why you see momentum traders adding to positions as the price rises. They are buying strength. However, we must balance this with the risks. The reality part of our analysis isn't all sunshine. The platform still struggles with toxicity. Neighbor disputes can turn ugly, and moderation is expensive and difficult. If Nextdoor gains a reputation for being a place of conflict rather than connection, user growth will stall. Also, the advertising market is cyclical. If the economy slows, local businesses, plumbers, realtors, tutors, are the first to cut their ad budgets. Nextdoor is highly exposed to the health of the Main Street economy. If you are holding this stock in a SoFi active investing account, you need to watch the local services CPI data. If service inflation spikes and demand crumbles, Nextdoor's revenue will take a hit. Let's talk about the retail versus pro dynamic on a day like today. On Robinhood crypto and stock forums, you will see a lot of hype today. To the moon emojis will be flying. But the professionals at Fidelity Wealth Management